Why, hello everybody, and welcome to Tuesday open stream. I hope everyone in America had a good long weekend, spent some time hopefully with their family and friends, and had a little bit of a relax, and obviously remembered all of the things that went on in the past, and yeah, of course, all of that. But let's get into the stock market and talk about what's going on here, because the markets are down. They are down at this point in terms of the futures. They had a great Monday start, but as we know, the fake market futures, the fake market futures were not to be. So that really means that all of that nice rally that we had in the fake market futures has been taken off. And this is good and bad. It's good because I didn't really want it to open so much to the upside. And it's bad because it's down and we want it to rally at this stage before potentially turning more bearish later on. So let's now just talk about the longer term. We'll look at the bigger pattern. We'll talk about some of the things that I think I was just doing a quick private stream then, and I'll say that one thing was brought up that I'll share with you guys right now, and it was a good idea. And why we think that there still could be a little bit more bullish movement in this market before it goes bearish. So let's talk about firstly the obvious thing, which is the double bottom. And again, welcome to everyone around the world. We hope you had a good weekend and you're ready to get stuck into this stock market this week, because it's going to be another big week and I expect quite a lot of action. We've got Rich Buddy in here. How many Pateks have you got, Rich Buddy? I want to know how many Pateks. You got a Nautilus yet, sir? And Sandollar77, $4 super sticker. Thank you very much, Sandollar. So the double bottom is the first thing I want to mention. Basically, this is, of course, the low, the maximum pain we've been talking about. And when you take a double bottom, usually people take that double bottom and they say, okay, I'm going to take the distance of the bottom. I'm going to extrapolate that out, and that becomes my profit target. Pretty valid. And of course, a solid concept. And in general, that would put us into this 4,300 stage. Now, I'll show you with options why that can still happen and why that's probably likely over the next couple of weeks based on where the options currently sit. So the market's down at this stage, and we'll look at the structure of the options. But first, I want to structure of the market. But first, I want to go over the options. Let's look at maximum pain level for the third week expiration options, because this is where things get a little bit more interesting to the community. And it's got to do with where the puts are. Check out these puts, everybody. We have puts all over. They're leftover puts still opened from last month's, or this month's, April into May's months of sell-off. This is where all the puts are. Puts everywhere. 400, 390, lots of puts. Notice over here, can you see it? 430. A lot of puts and calls sitting on that level. Maximum pain 425, higher than the current market is. Now, if you put that against this week, so we just think about where we are coming into this week, which will be the expiration on the I've lost it, third here. So let's load up the third. That's sitting at 396. So what it's kind of saying is that the market might pull back down a little bit, get a bit more puts put in, because of course we did see a lot of calls, a lot of people starting to go bullish after we as a community were already early. We were already sniffing out that nice buy. And now the market might come back down and then turn around to get back up to that 425, 430. So what do you guys think? Is that logical? Is it what's going to happen, or do you think it's going down? Give me a call in the chat right now. Are you bullish or bearish this week? Let me know, chat. I want to know, because I did a poll today and a few of you were coming in pretty bullish compared to the bears. I'll say that. So here's the market at this stage. It's pulled back. It's currently going down. Let's look at this structure of the futures market so far. And what I'll say about the structure is it's this: down, 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 and no turnaround yet. So we've got a peak, we've got a trough, lower peak, lower trough, lower peak, lower trough, lower peak, lower trough, and it keeps going like this. So what that means is that the current trend is down on the 5-minute, the 15-minute, most of these timeframes. And when you've got so much bearishness coming in, we haven't even seen any turnaround. So how are you going to spot turnaround? Well, you've got to use price action. So like we used price action before, we have to think about this logically. First thing, has the trend actually changed on a higher time frame? I'll ask the chat this. Does anyone know if the trend's actually changed on the higher time frame yet? That is an hour or 2 hour. What do you guys think? Most people coming in here, mixture of bullishness, bearishness. Seems like you're about 50-50. We might do a poll later. Westerosi Ninja says 420 is the max. Waller comments yesterday, offset Bostic's last week. So we've got the yin yang comments there. And then Powell meeting with Biden today. QT, which is tapering, starts tomorrow. Markets are scared now. Well, the tapering they kind of knew of. The question is whether Powell will come out and open his scary mouth. So could we see a sell-off to fill a gap as well? And then possibly a bullishness. We want to deal with what we know. And at this stage, certain things occurred. We snapped this. That was the last lower peak on the higher time frames. That kind of changed the trend on things like the daily for now. Now, what do you expect? A pullback to occur. That's pretty normal. But where have we got the last orders sitting? We've got them behind these swings down here. What do we have here? Theoretically, some resistance. What's going to be in here also is a gap. So let's load up SPX for a second. We'll use the real market. And what you'll notice is if you zoom in, what happened over here? We got a gap. Where did it happen? Right around that zone. So could the market come back to try to fill that gap? Would that also at the same time hit a 20 moving average on the 1 hour? You know, it's pretty far away. This market's gone so hyperactive, it managed to skip the 20 moving average. Let's look at the last rally. So you'll notice that came back to the 20, had a monstrous move, and then started to slow down, structure up a little bit. That was a very aggressive trend. It didn't really pull back very much. It just went ballistic. This time round, maybe a little bit different. Some people are expecting just ballisticness. But what if we filled and then went on to rally? Would that make sense? I think it would. And I do think there will be some buyers around this level. So let's go over the US 500 again. Think about these areas. So we're in an area that I definitely consider. I don't know that it's not going to turn around. But what I like to deal with is actually the market showing me it's ready to go. One of my big things with scalping and one of my pet peeves that everybody has is that they just go, you know what I'm going to do? I'm going to buy the dip. Buy. No confirmation. What happens? 10 minutes later, damn it, why did I buy that dip? That wasn't even the dip. I'll have to buy the dip again, this time with leverage. This time I'll buy it again with more leverage, and then you explode your account. Well, that's not cool. So what about if you use small time frames to actually see the change of trend? Now, that's something I'll be releasing relatively soon. I'll be releasing like a scalping course that is going to be very detailed in the analysis of how to see price action to turn it around, because it's something I haven't done in terms of releasing it before. The reason why, it takes a lot to explain it all because it's very structure based. You have to be very patient and disciplined. But here we have the market at this stage, still lower peaks and lower troughs. At least wait for it to breach the last lower peak on a time frame. Then it'll pull back. Then you can look to pick it up. That's really how the algorithms work and how the market works. What most people do is they see the breach, they buy the confirmation, and they're not patient enough to wait. So if you're like an itchy finger trader, do we have any itchy fingers out there? I'll put my hand up. I'm a little bit itchy. I like going in, getting in there, getting into the action. What you could do is instead practice scaling. Remember how we always talk about scaling on this channel? Scaling, very big level. So you could maybe put a quarter of your order down or a third, and that will help you to wait for that pullback where the market will reload and then create what we call the lightning bolt, which obviously happens like this. The trend has started. This is where it switched. If it made a new low, and things like that start. And you can then pick up better levels. You'll feel more like a boss because you'll be picking better levels in the market, and you won't get caught as much grabbing the dips. It will be tough though sometimes. Sometimes you'll have to let go of a trade. And I always say this to people in mentoring. I say, we have to come from an abundance mindset. It's the trades you don't take and the ones you don't lose on that is some of your best trades. Being patient and disciplined is really key here to being successful. Pulling the trigger never works out. And if it works out, unfortunately, it leads into a bad habit where you end up blowing your account through something stupid. So I do like this zone. I would like at this stage for this to occur, and then that. Targeting here, and then move through. That's one scenario. The other scenario is we come down, try to fill the gap in here, and then we get the switch. So we could actually have more downside here. It either stops right around where it is right now, creates like a false low max pain and turns, or we're looking at a little bit more pain because you can see the structure over here. So that's why it's stopping at this zone so far. So, or we're looking at more pain, we get back in here, try to fill that gap, then we do the switch. And ideally, that's where the last kind of buyers come in through here. Thank you very much, Sandal. 731 following. Appreciate it, guys. Great. Please mash the like button. Please and thank you. Thank you very much. Terry M says he has the itchy fingers. And then Matthew says profits cure itchy. Isn't it funny how when you think about it, what's the nature of people to do? You lose money. What are you going to do? I'm going to double down. That's what people say. I'm going to double down. Double trouble. Double when in trouble. Isn't that one of the things? Martingale it. That's all bad strategies. Yet when you're winning, people don't tend to actually ramp their potential risk up. You only ramp your risk up when you're losing. So it's very, very, very interesting on that. Douglas, Westerosi Ninja says the market is priced in the rate hikes, but not the QT, starting tomorrow. Well, it's possible. I don't know that yet, Westerosi. I don't think any of us really know whether the market's priced it in or not. If you can tell me how, send me the message and I'll check it out. I'm always interested to learn new things. We're always constantly evolving. But at this stage, I can't speculate that I know whether it's priced in or not. I can only go back over and say, well, is this still in a higher time frame trend up? And the answer is yes, because it hasn't taken out these orders that sit here. Someone bought aggressively here. There are orders through this zone. So because we know there are orders through this zone and we haven't broken below that, that's the swing. So until that swing's taken out and then we may rally, that's when I will turn more negative on this market. But until that point, I'm looking at this stage for the turnaround. Matthew says, I buy sleep with the trades I don't take. Absolutely. Thank you also for the members that have joined up through the last week. I do want to acknowledge a whole bunch of you. I can't put you on the screen, but I do appreciate that. So US 500 comes in here. We've got two big levels. Let's look at the US 100. Let's check that out. It'll be pretty similar strategy. Of course, at this stage, same thing, peaks and troughs, lower peaks and lower troughs all the way down. So we're coming into a box zone that I've got highlighted. Now, why do I have that highlighted? It's a mixture of this little bit of structure we saw here, and then, of course, the previous peaks. So I would like for the market to kind of go into here, do something like this, and then change the trend. Once that occurs, I get a lot more bullish because it's happened, and we've been patient, and that's what it's about. And it's a really big thing. It's a really big thing when it comes to these scalp sessions. So something that we do want to be doing. Do I like this zone? Absolutely. Why? Why do you think? Resistance, 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 possible support, possible turnaround. It just so happens there's also probably some orders sitting around here. Now, where does the trend change? Well, to a degree, it's going to take a lot of shorting to actually really change the trend on the NAS at this stage. So it still looks pretty bullish, still in a pretty good zone at this stage. Let's go over the Dow. What's the Dow looking like? Well, Dow, you can see where it could come back to. Again, structured a little bit through here, previous kind of zone. You can see that previous zone. So I think it could turn right where it is, opening the market, looking for the turnaround. Otherwise, I would suspect back into this level makes the most amount of sense, then hopefully some support for it. And that would correlate with most of these other markets. Russell 2000 is similar. The only problem with the Russell, and Westerosi could probably like this one, is that the pullback is now so significant on the Russell that it's equal to the last pullback. So the pullback over here is equal to this pullback. Interesting. So if we believe that, then we take the leg, and remember, this is an A, this is a B, this is a C. So what have we had so far? We had 1, 2, 3, 4, 5. So technically Elliott wave put in its 5 there. And then it's got the A, B, C. Ugh. That is not cool. I don't like it. So if you want to be bearish, I see what you're talking about with the US 2000, but it's not enough just yet for me. Certainly there. Let's go through some other markets, but before we do that, we'll just quickly check some other indicators. Look at the US 10-year. It's currently rising. US 10-year going up. Not necessarily good for the markets. We want to see that turnaround. So shout out to Shogun in the community. He's been warning everybody of this one for a few days now. All those dojis down here and then the rally. So high US 10-year, not really ideal for markets. We want to see that inflation kind of bottoming off. I think it's at a resistance at this stage. So this is, again, correlating fairly nicely. DXY moving up as well. A lot of people will explain this as being one of the key things. Yep, DXY probably due to do it. I mentioned today's video, breaching through the downward trend, making the new low, changing trend timeframes down here, smaller ones. Bigger one just changed. Probably a little bit of ramp here in the DXY for now. Kind of looks like it. Would I buy that? Maybe down here I would have. I think if you're trading today's and yesterday's session, certainly a good little zone. It's moved very nicely now since that point when I made the video this morning. That's pretty good here. I would rather see it do something like this, come back into here, and then look for the turnaround story there. Anthony Phillip becoming a member. Thank you very much, Anthony. Appreciate that very much, and all of the other members out there. Hope you had a great weekend and you're ready for a good market here. So what else have we got? US oil. Well, so far you're going to be sitting there saying, Tom, I told you oil's going long, man. Look, I'm allowed to not be in the market. Do I have positions? Not really. I don't have too much of a position here. But what I don't want to do right now, for me anyway, is trade energy, okay? I have my reasons, and for anyone that's done the mentoring would know why, but I'm thinking about it not so much this month. I'm thinking about it next month and the month after. Depending on what the US 10-year does, I'll give you a hint. I might not want oil anymore. So, yeah, oil is breaking out. There's no doubt. This was a huge level. When it breached, hey, I'm not a hater on you trying to take that to 124. Not for me, but I can see why you would try to get it up there. It has breached a hugely important zone, and it's done so in fairly good style. So this is ramping thanks to the EU, I think, more than anything else, and what they decided to do. US 10-year now 2.86. What else? Gold. Saw a few people mentioning that. Let's look over to gold. So gold is a strange one on the daily. Check out these daily wicks. Got wick, 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 wick. So we're wicking up and we're wicking down, and what we're doing is placing a ton of orders in the middle. So there's a lot of buyers and there's a lot of sellers and indecision. Technically, volume dropped off, but you can't really use that as much of an analysis tool because it's not true volume of gold. So let's have a look at the current 2-hour. If we expect US dollar to strengthen, probably gold will weaken. It's doing its best to hold this zone. So we had kind of like a little bottoming here. It breached down. This was a great Monday trade to the peak, take some off, leave some on for the rest. At this point, I don't really like gold until we breach past here again. 1856 is what I want to see done. And then at that point, I think this defense of this current zone, which has got all the wicks, is huge. So not too much movement here on gold just yet. Still a little bit weak, still floating around, not ideal. About 40 minutes off the open now. So we'll take a look at the pre-market. But yeah, gold sitting on support at this stage, having a battle. And you can tell that battle is taking place. A lot of currencies have good trades on them. If you want to look at yen currency pairs, some of those are looking fairly strong. A lot of retail trying to short against it. That's always good. Very good, Garrett. Thank you very much. West Rosie Ninja says, at FX Evolution, long bond rally, better bet than S&P 500 long term. Yeah, I think the bonds were down quite a lot. If you go into long bonds, you need US 10-year down. So the idea of bonds would be that you believe that inflation has peaked and that you also believe that rates will have to normalize lower than the Fed claims and that the market currently thinks. So you might look at this 2.57 and say, look, that can't happen. It just can't happen. The economy would explode and everyone would be, not buying McDonald's. Well, if that's what you believe and you have a lot of faith in that, then yes, you could target certain bonds. So things like treasuries, you can certainly target. And I've talked a little bit about TLT and others, but you can see the damage that gets done by 10-year going up. So this is very synergized to the 10-year. This is obviously treasury bond ETF, whether you use LQD, which is corp bonds, or we use some other government bond or whatever, you could use a whole bunch, but they will be synergized to rates. Because remember, when rates go up, bonds go down in general without understanding the other complexities. So it's a good example. And yes, to a degree, there'll be less volatility now that the bonds are so low and we're getting near that peak, hopefully, in the US 10-year. Tom, AR says, Tom, if you trade US markets, what time do you sleep in Australia, or is your day, or what is your daily schedule? Not a healthy one, technically. Now, look, if you're going to trade the American market, the key to trading, let's say being a scalper, is coming in around 1 hour early to the US market and being there for about 1 to 1.5 hours if you want to pick up the majority of the trades for the day. Setting alerts is the key. Wasting time in front of charts is such a waste of time. Now, that doesn't mean don't come back to this stream, 1,000 of you right now. You got to come back. You got to hit the like, and then you got to leave it on in the background, even if you're not listening, okay? But what you should do is you should set up boxes. So why I've got these boxes set up here, by the way, another reasoning for why we could get back to this zone, 61.8 fib, similar to last time. So just remember that fib and the pullback and everything kind of synergize well together. So why I create these boxes, let's say you set an alert above and then you set it, or you set alert at the bottom or whatever. Once you've created a box, if the market's not down to that level, then you don't need to worry about it because it's not where you want it to be. So right now, let's say I wanted to look at it for the open, fair enough. It's at the bottom of my box. I'm going to pay attention to the price right here. If I then saw it go through, I might set an alert above the last peak and say, okay, I want to set an alert for that. Don't waste the time in front of the charts. Once you see the markets and you understand them better, what you can do is you just set the alerts for the areas that you know you suddenly want to react to. But other than that, you're not interested. What a waste of time sitting in front of the charts. So say like here, if this is the price you wanted, then put an alert at the top of the box, come in, then spend 2 hours in front of the chart or 1 hour in front of the chart doing the analysis. So yes, from Australia, you do miss a few trades, but it depends. Like say you dollar cost average indices for an investment. Well, it's not hard when you open and you close and you can wake up in the morning. If you're doing day trades, it's always around the open. If you're doing swing, it's always the close. So you don't have to be there for the whole day. You just sit around the times that matter. Because remember, Wall Street add their positions near the close. So it's the best for close confirmation daily trades. The open is best for scalping day trading. Gunga Din becoming a new member. Thank you so much, Gunga. Thanks for the support there. China ETF breaking out K-Web Chinese hyperstock ETF. There's a hyperstock ETF. I have been watching CQQ. I will say that. So let's just have a quick look here at the Chinese market. This goes CQQ, which is the Chinese QQQ. It's looking all right. Everyone's hating on it. Believe me, for anyone that's new here that hasn't subscribed, you would know I hate this market so much sometimes. And why I hate it is because it's just been in a hideous downtrend for so long. And I got asked about it so much. And I remember the barber when we were looking at 200 and I was like, oh, look, there's a double bottom here. It looks all right. Stop loss, blah, blah, blah. That was fine. But then it fell through that. And everyone was like, I'm going to buy the dip. I'm going to buy the dip. Well, how's that gone? It's gone. It's a horrible, horrible time. When we look at this market, though, it's basing. It's accumulating. Look at the sneaky volume coming in. There's something happening here. And I can tell you it does look better than it is. Well, it pretty much is the best it's looked. Over here, it could have been the bottom. It never breached and actually showed us it wanted to change trend. I'd be very cool if it did so right here. This is certainly It's in my box for a reason. I had this already set up because I am very much watching these max pain levels. I'm watching the accumulation, but I'm prepared to be disciplined here because I know that this market's sneaky and they tend to punish people that get in fast and early. So I'll just be looking for some of the cheese later on. I don't know if I can go into it. What was this called? K-Web. What is this? Never seen this. Crane Shares China International ETF. Well, it looks the same, I guess. Huh. Anyway, CQQ, certainly better than it was. What about your taxes? What? Yeah, we can trade the American market. Well, we trade them with Australian brokers, so it's not a problem. Kim says the good point. Not bad to trade the US first hour in Oz at the moment. Yeah, not good during the rest of the year, though. That's right. Daylight savings makes it easier. Thank you very much to the over 1,000 people joining us here for the Open. We've just been going through the market so far. We've done US 500. We haven't done the pre-market stocks just yet. So we'll bring up some pre-market changes. Let's have a look at these 10 billion plus companies. How are they moving? What's going on? So it looks like from the negative side, we've got about almost 1,000 companies here. So we're just going through all the sectors. From the negative side, we have some airline companies. Looks like we have some food companies, a bunch of different stuff. From the positive, what have we got here? Not too many surprises. These are all SEs up 1.98. So the hyper stocks, maybe a few of those are doing a little bit better. Let's change this to 20 bill. Okay, so that'll take us down to 609. So let's have a look at the pre-market there from 20 bill. JD, so another pre-market Chinese stock. Baidu doing really well off today's session, I guess. Alibaba, again, Chinese stock coming to life. Semiconductors doing okay here. That's good to see. SE again is just there. I'm just looking for hyper stocks. I like to know whether the pre-market's interested in the hyper stocks because you guys love that quite a lot. I've hated hyper stocks for a little while now, but they have come back to life just recently. Yeah, I mean, the market's not actually down that much from where it closed on Friday. I think everyone needs to remember that. Futures look horrible, but they're just pulling back down to the level. So nothing too noticeable here about the current change. I would say that in general, the tech seems to be, or the hyper tech seems to be where a bit of market action is going. Let's just check some of these pre-markets. 0.44 down, that's negligible. Apple's going to be down more than that, say 0.62. Let's have a look at Google, down 0.62. Let's check out Etsy. No trades pre. Net, no trades pre. What else? What trades pre? SE, we obviously saw before. DKNG, no trades at the moment. Shop, 1.07. So hyperstocks actually holding their own in the pre-market. And I just think this is because they're down so much. Like so much. Like you look at Shop, it's barely recovered. Now, is there a turnaround story here? Not really yet. But they are on their knees and they're kind of behind some of the other market participants. I don't like to call the bottom for these, but it's interesting where they are. It's interesting where they are. Let's have a look at Tesla. Dennis, thank you very much, Dennis. Appreciate that. And we've got a cash chopper of $5. Thank you. Morning, Tom. I woke up late. Can you start from the top? Joke. Yeah. No. We're not going back over all, but yeah, we've mostly just covered the Chinese market quickly and the S&P 500. Thank you very much, Akash. Appreciate it. Waka says, lol, Bull's about to learn what bear market does to buy the dippers. Oh, well, yeah, of course. If you believe we're in a bit more of a bearish run, which seasonals would say yes. I mean, if you bring up any seasonal out there, you're going to get a downward trend in a midterm election year later on. Rallies are usually significant, and they're generally around that kind of 10 to 15% in terms of the rally for the SPY or the Nasdaq, and then they'll dip. So I think you've got to be, on the alert there for these types of things. we're looking at it from the surface of what's the price action telling us. And so far, the price action has been going up, bullish recently. There's a case to be said for 429 on the SPY. So that's 4,290 on the US 500. And that's probably one of the strongest cases at this stage. Let's look at Tesla. So Tesla's up 0.94. Bit of an indication maybe about the hyper stocks as well. It's actually up here in the pre-market compared to Apple and others. So what did Tesla do last week that really changed the game? Well, it all changed here. This was a huge deal. Very big deal when it breached that. When it breached that, it cleaned the gap, which was pretty cool. I think a lot of people would have been going at it here to try to clean that gap. Fair enough. It hit one of our box zones on the left-hand side. And the next thing it did was it breached through. Now, it went incredibly aggressive. It's leaving a gap in here. So there is a gap range in here, which is consistent with that idea that the market comes down, fills those gaps that were left here on most stocks, really, and then tries to rally. But at this stage, Tesla's very strong here in the current price action trade. It all changed here. There's no reason to say Tesla is bearish on this particular time frame, being the 1 hour. Let's have a look at the 4 hour. Has it even changed there? It's probably changed for some people. I would say yes. Let's have a look at the daily. Daily, not so much. Daily's obviously hit the 20. So I'd be careful with Tesla. The rally that was there to here was certainly significant. That was fairly predictable. The volume is relatively high considering where it is. A lot of transactions going on. I think Tesla's a bit of a trade stock at the moment, personally, because of the large moves and the instability that's caused by this. This I can't quite get over. Whenever you have a market that goes euphoric and then gets crunched and then pulls back again to that 78.6 style fib, like it did here and here, this tends to spell the end for a lot of stocks. Now, I'm not sure if it's the end for Tesla, but these types of bullish rallies, they're really bad for this stock and the health of the stock. I don't like it. I'm just telling you how I see it. I don't like it. I would like to be nimble and fast. If you have absolute faith and that's your long-term hold, absolutely fine. But if I'm looking at it from a price action perspective, it's got those things that make me want to say I want to trade it more than I want to do anything else with it. Looks bullish, but mostly short covering. Yep. And all run up based on low volume. Well, low volume will generally be the run up anyway. You don't usually see huge volume in any one of these bull kind of runs. They're usually lower. The options is the interesting part. The 3rd week expiry that we looked at the start of this video today, that was the really interesting part. Remember, we have an options expiration on the 17th that's sitting at a 425 max pain. There are so many currently still open options floating all the way down here. Wall Street doesn't like paying these out, okay? They do not like it. They will leave them and let them hopefully expire worthless. So as long as these all stay open, it kind of cements the idea that pullbacks will be met by buy demand. We come up here, hopefully there'll be tons of calls. The higher the calls go here, the more confident we are that that will be the turn level. I like to use options as call walls, put walls. Obviously, I come up and coined that idea, but it's based more on when you think about it. If you're hitting a key resistance, there's tons of options there. Wouldn't that be a great place for them to expire? Who writes the options? Generally, the street does to the retailers. And when there's a huge amount at a round, it often can be retailers just jumping into those positions. Ryan says, absolute faith, Tom. Good. At least you have an opinion. That's awesome. Tesla forever. Very good. YM says, Tom, what do you think about Amazon and the split? One of your videos you mentioned splits typically raise stocks usually around 40 to 60. That is correct. So there are 2 major split stocks at the moment that are really interesting. One of them is my second favorite stock in the market, Google. So I actually really like Google a lot. I think Google is... I want to actually ask the chat here. Chat, let's find out what you really like. It's a great experiment for the 1,200 people here. Put in your 2 favorite stocks. Let me know right now. I want to know your 2 favorite stocks. Let's see what everybody likes. I'll give you mine once you give me yours. Okay. And this isn't a solicitation to go buy these stocks. And they're not going to be like, oh man, Tom, you're picking the best. You're picking this new great hypergrowth or something. I'm not going to do that. Believe me. But what I am doing is I'm saying, like, for me, Google is a pretty important one. So the split is coming up. People really reacted to the split over here. And since then, it's been nosediving and it hit that kind of first level support. Look, I quite like Google. I do think the split should be good for it over the longer term. Now, the split stat that I gave you was a split leading in, so a better performance leading in. I don't think it was really talking about like a 4-month split window, though. So you got to remember they announced it here. Where is that? 2nd of Feb. Yet the split's happening over here. So yes, I do think we're getting into that point that June into July will be a very interesting time here for the stock market, because figuratively, this stock should hold up better into the split and do a little bit better because the performance after splits was also superior. So yes, technically Google from the data should do pretty well. And Amazon, that's now basing, because it is basing, at a point of resistance from 18, should theoretically do better. And it's coming up to the split. So everyone's talking about it again, I guess, at this stage. Yeah, look, I could think of worse deals than Amazon in this current market. At least it's discounted now. Back to 18 price. The only problem is that they're reliant on China supply, so the supply manufacturing around the world, and they're very, very reliant on, obviously, the American consumer feeling relatively rich. And right now, our best indicator for that, for anyone who's joining us right now in the markets, is XLY, XLP. If we do not see, and this is what this market's doing here in the pre-market, is showing you that at this stage, Wall Street seems to want risk on. This is a good risk on. It's a very good indicator. I know it just looks like 2 codes together, but what it tells you is whether the market is defensive or whether the market is risk on rally like. And what you'll notice is when you zoom it out, there's so much knowledge to be had in this chart. Because think about it. In 2018, the market started going defensive. The whole year was very defensive. It then crunched itself. And then, of course, risk rallied on. But the whole time, it was actually quite defensive. And if anyone remembers back at the end of 2018, not only did the market fall, it fell very significantly here. It then rallied. And what they did was, even though big tech and some hypers were moving, what was really happening underneath is there was a shift to defensive plays. It was the end of that business cycle. So whether the pandemic happened in 2020 or whether it was something else, I almost put it in stone that there would have been a crunch in the American market in 2020. Maybe not to the degree, maybe not to the Fed having to come and pull the guns out, but that's what would have happened. The market was telling you that. This time around, coming into this crash, the market started falling off on this from November into December into Jan. And it's been going down since. So it's actually just that first time in a while based. Michael Meow says, Tom, I'm trying to join your Discord. However, invite is being declined. Any suggestions? Has anyone else tried the Discord link in the link down below and it's not working? It should be not expiry. So just let me know. Here we go. We've got some picks coming in. Otherwise, just send an email to support@fxevolution.com and I'll see if I can fix you up. Give me your Discord username and I'll see why it might be there. Okay, here we go. We've got some people coming in. We've got Google and Microsoft. I think you've got a big brain. That's a great pick. What a combo. I wonder who else likes that combo. We've got Rob coming in, Tesla, Microsoft. A lot of people Microsoft, a lot of people Tesla. I don't even know what that is. Sandola says GNK, Google, Microsoft. Fair enough. Tesla and apps. NVIDIA, Apple, SPY, VOO. AMC, GME. Wow. Die Hard. Absolutely love it, don't you? Microsoft, Google. A lot of people Microsoft, Google. Hopefully that's not stolen from me. Tesla, Google, Tesla, Google, Coin, Netflix. Wow. Okay. Netflix, I can get behind. Coin, cool. I hate Google, Tesla, or D-Dog, says DS. Why do you hate D-Dog? D-Dog was cool. AMC and GME, YOLO, says Luke Lee. I don't know about that, Luke. I don't trust you on that one. I don't think you're YOLO there. So a lot of you guys seem to like very similar stocks. It's like NVIDIA, Tesla, Apple, Google. Not many Amazons there. Few Amazons, but not a huge amount. So yeah, mostly people going for the quality. No Facebook, I noticed. No Facebook. So Amazon coming into the split, and also, of course, Google. I like Google the most here. I think it's just got a very solid business. As more things move online, it technically makes more money. It still has, what is it, number 1 and number 2 websites in the world that are most visited. I think that's true. You're here right now on YouTube, so technically you're paying them a little bit of cash. Let's now go over to the US 500, see what it's doing here in the futures market. Let's have a look at the 5-minute chart. What do we got going on? So did we make a new low? We did, barely. And now it looks like we're having a little try at rallying. We're still not breaching through the last kind of peaks, though. So at this stage, nothing much other than just a little beginning of the signs of turnaround. Market closed around 41.50, so this would be flat on the open. Time to short natural gas, says Lemon. And Kevin N says, why aren't you on the 1-minute chart? All right, we can go on the 1-minute chart. Why is my data so many wicks here? That's what I would ask. Look at that. We'll use ES. Get rid of this. Oh, look at that. Isn't that better? You know what? Get out of here. We're going to bring in our ES S&P 500 mini futures. Hideous data. If you ever have the data wicks, you say no to that, okay? And you replace it with some high quality, better. I hate data wicks. There we go. Much better. Look how clean that is. Beautiful. So there's our 1 minute. No change of trend yet on this. Let's have a look at our 1 minute US 100 here. New low. Okay, so we've got our last peak over here. So I'd like to pop that in. There we go. We've got that set up. And we'll go back over here to the pre-market, check it out. And then we'll take some chat questions. Hopefully I haven't missed anyone's super chats, but thank you very much for the support tonight. Appreciate the members, appreciate the super chats, and obviously the likes. Like the video if you enjoy it, guys. We will be doing a special thing next week. So we're going to start bringing in some level 2 data action as well. I think you guys will really enjoy that into the market. We're talking about how to use it, maybe how it can help you to really understand these market flows, why people get trapped, why you probably place orders in the wrong areas a lot of the time. So that'll be really cool. And that will start from next week, I believe. So again, hyper stocks seem to be the flavor of the morning, especially Chinese stocks. They seem to be the kind of action in the pre-market. And the other stocks just not as hot, which have been the big tech, at least early. I like to just stick to the US 100, S&P, Dow, that kind of thing during these times of recovery, especially when you're trying to, unless you're investing, especially when you're trying to trade in and out, it can be like if you buy Apple or you buy Amazon or Google, you'll pretty much get a very similar return on the US 100. So why do you go and attack those stocks unless you're looking to invest in them? You know, it clouds your judgment and makes it harder to descale your position as well. So just a bit of a hint there. I think that a lot of people are starting to really wisen up to really targeting in these specific markets in terms of the indices. It's what I've always believed anyway. Pretty important. Is this a bit of a rally we're seeing here? Massive rejections on oil on the lower time frames. All right, let's have a look at natural gas. So you know I'm not a friend of the natural gas at the moment. I do not like, and it is going down. And I hope it, you know, in this one here, I do have an opinion. I want it down. Natural gas, not an easy trade. I'll say this to anyone. Anyone that's never traded it, it's called the Widowmaker for a reason. It's terrifying. And if you want proof of terrification, not that that's a word, but if you were thinking about getting terrified, Stranger Things, if anyone's seen that, we're going over here and we're seeing the ramps of the past. So remember, things that are happening right now, you might think, oh, natural gas is pretty crazy right now. Well, think about back here. Natural gas has a tendency to go boom, 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 and then bust, 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 bust. All of these things, they're terrible. It's terrifying. So I always suggest whenever you come into a stock, load that monthly up and check back in the past history. Yeah. Just have a look, understand the flow of that market. Is it crazy? Is it something that you don't want to be involved in because one day it could cripple your account and it will be sad? That's the type of thing natural gas trading is. So you've got to be very careful about the instrument that you trade, whether you're short or long, because it can rip you apart. So be careful there, guys. But this is technically a tweezer, and it is looking at this stage negative. And I don't like that type of action. It's similar to what I was saying about Tesla. When you start getting these huge ramps and huge dumps and huge ramps, that can mean that the end of the kind of trend is close or near. Let's have a look at the US oil. So you guys said it was going down. Doesn't look like it's going down right now. It's going up. Razor wire laser beams, $10. Thank you very much for the generous donation. Hey, Tom. Could you take a peek at FCX Freeport? It's a copper mining company that I'm thinking of holding for 3 years, but maybe scaling out of this rally instead. Thoughts on this Druckenmiller fave? Well, if Druckenmiller likes it, I like it. I love Druckenmiller. Druckenmiller's cool. Best trader of all time, in my opinion. Maybe not in his prime anymore, which I think he would admit, but certainly a god of investment. To make 30% per year on tens of billions of dollars for 30 years straight with an average of 60-something% return during bear markets, that's not easy. When you get into the billions, guys, it is really hard to make money, in terms of the same scale of those types of percentages, because you can't just go and buy a stock. Look at Cathie Wood's problem. She told everyone she was buying a stock, worked when she was right. Now she's struggling probably to get in and out of stocks without moving the market because she's not in liquid assets. So it's a big issue. FCX here, copper mining company. Is it good? Let's have a look at the weekly. So copper's taken a dive recently, and it makes sense. I mean, what you would do is you would usually overlay copper, see how synergized it is to the copper price. So you can see here that copper kind of peaked back in 3rd of May, went to a new high over here, which it did, and it's kind of come back down to the lows, which is consistent. It's not cheaper. If you're going to buy copper, you've got to believe the economy is not in a recession. That's just how it is. If you believe the economy is going into recession, copper is a very tough pick because copper is used in so much construction. So you've got to be careful there with copper. Copper is, they call it the Dr. Copper for a reason. If copper fails, it can be a sign that the market is completely stuffed. Now think about it. Copper, 15th of January 2020. They find out about the COVIDs. Copper dumped so hard, it went whack. The rest of the market didn't, but copper went, no, I'm going to burn. And that's what it did. It got destroyed during that first 2 weeks because they didn't like it. The metals traders are really smart. And they said, no, I don't like this. I'm going to get out because demand's dropping. At this stage, this could be a Wyckoff. What I mean by Wyckoff, we've got the max pain kind of here. We've got the sell-off. I'm looking at this zone. So I do like copper quite a lot, but you've got to have faith when on a recession. Michael H., thank you. Appreciate it, Richard. Thank you very much. So we're coming in here to 11 minutes away from the market. We've got 1,300 people. Thank you so much for smashing that like button. Appreciate it. Kevin says most commodities have had good corrections except the two that will cripple the economy, i.e. oil and natural gas. That is correct, Kevin. Another thing that you can do is have a look at the metals of mining. A lot of people don't do sector analysis. Anyone that's done the mentoring would know that I'm a big fan of sectors. Sectors. I like them a lot. And the real trade recently has probably been in here. And I did put this into the private community and I talked about it because there's a big sell-off that occurred, which is very sneaky. And there's a good chance that at least it comes back to a 61.8 fib or somewhere around there. So at the moment, yeah, metals have had a rebound after getting thrashed. And they dropped a lot. This wasn't insignificant. That's a 30% drop in the sector. All right, Musty, we'll have a look. ASML. This on the Euro exchange. What is this? Okay, weekly's closed against the Doji, which is good. You'll want to clear this level ideally, then see a pullback, and then you'd probably grab. So at the moment, pretty decent through here. That's good to see. The spring volume relatively low, decent volume through here after the earnings into the divs. So there was some accumulation. I would like to see it break past 595, breach, pull back in, and then see a spring or something. And if you got that, you would feel very comfortable somewhere around here. So like breach, pull back to somewhere around here, see the turn, bang, or fill the gap, bang. That would be pretty nice. So yeah, it looks okay. Weekly better. Daily looks decent in terms of soon, but it's not quite there yet. Razorwire Laserbeam says ASML has the biggest moat there is. Cool. Well, that's good. Maybe I should check it out. John W says this market, like last year, is so hard to trade because market rotation is constant. No normal trader can pay close enough attention to get in or out quickly enough. The rotation has been happening a lot. And if you're struggling with that kind of rotational and you know what you're doing anyway, if you don't know what you're doing, you'll get thrashed. That's true. If you have an understanding of how rotation occurs, you'll do a lot better. That's for sure. It hasn't been as fast as you think. It's been about correct, actually. Very, very correct. It just isn't what most people think rotation is. It's been consistent with what I look for. What you should be doing, though, instead is just pulling it back. S&P 500, Nasdaq, IWM, Dow, gold, those kind of things. Matthew Harris, Australian $2. Thoughts on XBI? Love the stream. Yeah, let's have a look at XBI. So XBI, biotech, thrashed. Okay, so biotech hates high yields. Why? They don't make any money until they sell it to an expensive company, all right? That's what happens. They make no money, guys. They might be saving the world, but they don't do it by making money. So unfortunately, XBI is a tough pickup because it's still high yields. It's a belted area, very heavily hit down. It's on a monster. So what I mean by a monster is it's on a super support that's been hit for years. It got hit during the 2020 lows, during the 2018 lows, and so far it's holding up. So my opinion of it is this. There's tons of volume. There's no question. Look at the volume in comparison. The volume is a monster compared to before. It's pretty oversold. There's a lot to like about bio for the next 10 years in some ways, but it's a tough purchase. So I think breach of this will be a relatively big deal, but it's not really the full change. I mean, the change on the small time frames, let me have a look at an hour here. Let's see if things happened. Okay, I can get behind it a little bit more. So yeah, I mean, I could see it rally. I think it'll have an issue with it here. And if the market, but you have to hope the market's rallying. If the market doesn't rally, XBI is unlikely to be the first to come through. But it's on a big support. TDOC, please. I haven't looked at TDOC in a while. Guess the price of TDOC. Last time I checked, it was 60. Ooh. Was it 60? Was it 35? Oh, no. It's pretty low. Yeah, first time frames change to a degree. I'd like to see it through here, ideally, then get a pull and then take it up. I don't want to call the bottom for T-Doc. They burn cash so hard. Yeah, I don't trust the CEO, frankly. I didn't like him. I remember I bought T-Doc. Where did I buy T-Doc? I got out because they scared me. Over here. I remember that when it was dumping off and bought it. And then there was the earnings. Yeah, that was when it all ended. Yeah, I remember that. Aussie says, at FX Evolution, is the VIX stronger indicator versus the index? If you trade some indicators, who is decisive? So when you say is the VIX stronger indicator versus the index, I'm not too sure what you mean by that. If you mean I use the VIX as a gauge to what instruments I want to trade, absolutely. I'll give you guys a hint. VIX under 20, swing trading, okay? VIX above 20, day trade, DCA, scalp. VIX above or equal to 25, this still, but then you want to change your instruments as well. Generally index, currency, gold. And what that will do is it'll help you to not get stuck in horror shows, okay? This is coming from a bit of experience. I don't like swing trading when the VIX is above 20. You get destroyed. Someone in the chat, please tell the rest of the community this is true. I know we're 3 minutes off the market open, but I think this is pretty important. Does anyone agree with that? You know, if the VIX is really heavily above 20, like maybe like a 21, 22, it's okay, I understand. But when it's above 20, if it isn't just to be in a recession and then we're coming back out of it, swing can be really tough. And you get messed up because the decisions are really quick and they destroy you. VIX above 20, dollar cost average concepts, I can't tell you to do them, but obviously that's something people do. Day trading, scalping, being nimble and fast, I think is pretty key. You can still keep up certain rotationals at that point, but when the VIX is above 25, you got to pull in. You got to pull the head in. Listen to me from this aspect. I got my ass kicked plenty of times by not following that. And it wasn't good, yeah? So, I mean, this is a long time ago, but I remember the GFC, and when I was trading it, I was like, how am I getting destroyed? I'm following the trend, you know, but the trend would change and it would get brutal and I'd get bashed up. One day it was up 7%. The next day it was down 10%. And I'm like, oh my goodness, this is the worst. So many of you haven't experienced that. Some of you have this year, of course. 2020 was pretty wild. That was the most amount of drawdowns, but that's a good rule. Decent little concept. Thank you, Kevin. Appreciate that. And Dirt Rider says the VIX is truth. There we go. 2 minutes off the market open. Let's have a look at this coming in. We'll get those ES futures, S&P 500. A little bit of a rally here coming to the market. We are still net bullish in terms of concept at this stage. So what that means is that we basically have no reason yet to think that this market is turning to the downside. Our last swing was down here technically, okay? We have hit a zone, 4,200, no doubt. We're in a box area at this stage. So let's just draw up some boxes. We've got a box up here, gap sitting up there because we switched the platform. We'll quickly just go over here. We've got a bit of a zone previously created here, which is where we are at the moment. And then we've got another zone underneath, which sits just around here. And that's where the gap is, around that 40.65 from one of the previous days. So the market either tries to rally off this point here, or in some ways I could see it down to this zone. Both are still acceptable within the bullish tendency of this market. We're still going bull, movement, and looking for it. I hope to see bullishness out of the gates here, and let's find out if we do. So the market's opened. We'll check out all the stocks in a second. Let's just quickly scroll down here on the side. check this out. So we've got Square down 0.72. Apple's come up quite a lot, only up 0.18, but it was down 0.6 before. Amazon out fairly strong as well. And, oh, is that right? What just happened then? Did it just open? Must have just opened. So I saw big switches come through. I think a whole bunch of other stocks just came in. So let's now drive into the 1 minute chart, have a look at these ES futures here on the real market now with the structure formation we've currently got. So at the moment, we kind of have troughs. We don't have a lower trough here, which is a bit annoying. We've kind of got an equal base. I would have preferred it made a lower trough and then breach through, and then I'd be looking at this. So we've got a big level here for the day. The big levels are somewhere around this area, 41.65. And then we've got another zone sitting around this 41.50. Not as big, bit harder to read that one than usual. And what we're looking for is actually breaches past these zones, then pullbacks back into the areas where you target and then you look for. Now, of course, you've got to bring your own system in, but there's no reason to currently say that this market is going bearish past those 2 points we just mentioned. So again, coming into the market at this stage, I'm hoping we can structure base form here. We have so far formed base in the pre-market. We've rallied down. We're looking for a change. We haven't seen any changes in trend. This will be a bit of a diabolical area, I think, for the bears and bulls. And of course, first step is actually getting past this, pulling back, and then ideally moving forward. We will talk about Bitcoin just a second in terms of the 32,000. We'll see what happens there. We've got Verified News coming back. Haven't seen you for a while. Welcome back, Verified. Good to have you here. What happened to oil? Holy smokes. Oh, 119. Okay. People are looking at oil and I'm confused by what they're saying, whether they mean it's up or down. Oil got pushed on by the EU stuff. At least that's my opinion. All right, let's look at the open market, see which $20 billion stocks have actually changed the most here. So we'll look at the percentage change. Scroll up here. We've got Yum China Holdings up 10.7. We've got Pinduoduo, so mostly Chinese stocks, or SE pulled. That was only up 1.8 before. Is that real? Or is this not correct yet? Wait a second. Let me just make sure I'm correct here. Oh, that's right. 8%. Wow. I love it how they put in SE like it's a Chinese stock. It's actually a Singapore company. But anyway, so SE here, very, very decent move. Alibaba, bunch of hypers mostly coming through. A little bit of semiconductors in there as well. Amazon Tech. I expect risk on to do better at the moment than risk off, because it's been belted so much. And the main reason, again, comes back to XLY, XLP. At this stage, we've got a doubling bottom. We've got a bit of a move here for at least similar to over this point where we saw risk on outperform risk off. Don't be caught, though, into the idea that this is all gravy train for risk on. We don't know that yet. But it's currently showing that money transaction being higher. Let's just load up here the actual sectors and how they're running right now. So we'll bring all those sectors onto the board, find out which sector is performing best so far in the market. Currently, it's energy up 1.4%. Let's bring it here. Got tech down 1.18. And usually what you want to see, if risk on's going to do a better, you want to see PBW, TAN, generally out in front. So those are the ones that usually point towards more the hyper stocks. So if you're looking at a sector chart like this and you're saying, where's this money going? At the moment, it's in energy, it's in gold. And we've seen the hyper stocks slightly better than the rest, at least at the open so far. So generally clean energy and TAN in terms of these sectors show you that strength there. Biotech currently down 1.66. So no turnaround yet in the futures. We'll read some of the chats here. Michael H says uranium's going. Dump on the opening, says Henry. US 100 now down. Made a new low. Okay, that's kind of good in some ways. You might be saying, why is that good? That is so stupid for you to say. Well, because if we rally back up now in the minute, we've made the new low. So this is a chance that we could sweep here early and then come back up. What you're really doing here is you're trying to react to the market. You're trying not to predict your knowledge of the day. You're just saying, okay, we're in zones that we're interested in. And then once you've decided on a zone or you're interested in a zone area, you're looking for the reaction that tells you, okay, yeah, the market's told me what to do. At this stage, I wouldn't be anything other than bearish on the small time frames. And I'll just tell everybody why. Peak, trough, lower peak, lower trough, lower peak, lower trough, lower peak, lower trough, etc., etc. Until that sequence changes, how can we even claim that this market has a chance of turning around? We don't know that yet. Just remember that. You don't know anything until you see it. Once you see it, you go, I know what you're doing. Then we make the next move. YouTuber says VIX at 28 now. Jay Powell and Biden are the FUD1 and FUD2. True. But what do we know about FUD1 and FUD2? They come out and they say, hey guys, we're here. We're here to talk. And it's like, yeah, okay, what do you want to say? And they say anything they feel like. And then all of a sudden you see them at the market go down, 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 then it turns. The FUD1 and FUD2 have done their job. TLT down nearly 2%, says Kevin. Yep, US 10-year, man. US 10-year. US 10-year going up, not cool for the TLT. Very correlated, remember. US 10-year goes up, TLT goes down. US 10-year goes down, TLT goes up. Okay, so here's this sell-off. Remember, we haven't seen any change. So what you've got to really do here is you've got to be patient. If you were short from the futures, you truly have no reason to say, I think I'm going to get out, other than you might go to a 1 hour and say, well, I was already targeting this box. So it hits our box start here for the NAS. First box was sitting in this area. Second box sits here. So we're looking for the sellers to relent and ideally turn around in somewhere in this area here. I'll just tighten that up a little bit for you based on the wickings. Another thing you can do is if you want to add in a volume profile. You add volume profile visible range. I like to set it to the left. You can change colors if you want to. You sometimes want to look at this and you want to say, okay, where do the orders sit? And you'll notice why this is such a huge level. Sometimes you'll see the resistance support level, which is not going to show on the volume profile. But this is how you can spot other areas of structure. There's a lot of orders in here, and that's why it's structured through that. Now, I don't want it to get there, ideally. I would rather it turns in this box. But this is a box based on resistance support normal process. This box here is created through structural formation and orders sitting out everywhere. So this, you need to see a turnaround. Always wait for the confirmation here. If you just start to pick a level, remember scaling is your key on that one. John W says volume profile is a pro feature, so it costs. That's true. I didn't know that. I guess for full disclosure, I do get a free copy from TradingView because I have a little link down below where it doesn't come at any cost to you. But if you do sign up with the link, I get like $5. It's about how much I get to, about $5. But yeah, they give me one for that. And I say, and look, it's a good platform. There's no doubt. Doing your analysis here, TA. There is a free version, which is fantastic. Volume profile, by the way, it might speed up, but you don't need it. Think about what volume profile is really telling you. It's just where the congestion is. So if you want to see congestion, how am I going to figure it out? Go to a line chart. I mean, why is the volume profile huge here? Look. It's not hard to see that's the zone in the middling. Where else are you going to have it? Clearly here. So volume profile is cool and all, but I mean, geez, you can use your eyes. Most alerts, most of these things will be very easy to spot. We're down about 1.94% at this stage. So NAS getting hit. Interestingly, Amazon and Google, the two split stocks, holding up 1.1 and 0.39. We're now in the middle of the box. Let's go to the one. We'll go to a 30-second chart just for fun. I'm not freaked out, and there's a reason why. And no point to freak out when you expect the market after a 9% move up or whatever it was to have a pullback. You do need to put it in perspective as well. What you see here in the futures is a lot of action. Like it looks like, oh my goodness, it's dropped so much. Look at this. It's gone from here to here and it's down 2.63. It's not as much as the real market has. Mountain Fortress says the sooner oil comes down to 100, the sooner we can rally. Yeah, oil going down would be really nice right now. I hope this is the last leg for oil on the way up, because we do not want oil to crack like a 130 a barrel. That would be really less than ideal. So market's still selling here. Let's go over to the current price changes. I'm not too sure if I've got this. That's pre-market change. One second. Okay, there we go. So we've got Snap kind of on that 6% down, really just getting hurt. Square down 3. So a few hypers in there. J&J down as well, 3%. What's up still? The Chinese stocks dropped a lot there from where they were. They were up 7. Still 5 here for SE. That out of the gates was very strong though. 1.99. And then all of a sudden opened up at a 7. Three minutes till quarter 2. It's on purpose, no way it's accident. Yeah. Not wrong, Michigan. It is technically all manipulated. US 10 years certainly going through the general kind of list. Did I have this particular one mislabeled for today's stream? I don't think I did. Someone just messaged me. Let me just quickly check here. So we're in the box. I expect turnaround hopefully in here. Let's go over to the S&P 500 now. Find out, okay, new low. That's okay. No change of trend. Remember that. It's still negative for now. So a few of you won't like the action that could be there to take place because, of course, if S&P 500 tends to go down, it's going to be a brutal one for the NAS. So if S&P 500 goes, oh, I want to go back down here, well, unfortunately for the NAS, you can tell where that's going to be. So ideally, we get turned around relatively soon. 2 minutes till quarter 2. We'll read some chat here. We'll see what you guys have to say. 1329 says, loving it. Hey, if you're short, you love it. You're in a bit of an interesting area, though. 10 Cent Murphy says, you're limited to how many indicators, though. Probably just need to remove something off your chart. Yeah. You don't look. If I was having indicators and I was picking what I wanted, I don't need volume profile, but I like having it there, but I don't need it. We can remove volume profile. Let's get rid of that. Frankly, I have the 20 moving average. I also would say, Bollinger is not bad. I just find it ugly for when you guys are looking at it. There's no, like if I have a Bollinger sitting there, it's not as easy to see and it's kind of annoying. Bollinger is quite good, but it can become a bit of a cheating technique. And you can get a little bit caught away with the Bollinger. So you might go, oh, I want to get the Bollinger band. Let's make that a little bit thicker here. There we are. The Bollinger Band basically has the 20 in it. So it's the 20 SMA, yeah? So if I delete this EMA, that's the 20. This is 2 standard deviations away from the 20. The 20 is the best moving average and one of the best. And what you can then do is you can say, well, if the Bollinger gets exploded like it is right now, is it hitting an extreme? And if it is, then it helps you in a zone to say, well, this is where I think, rally buying might occur because it's outside of my Bollinger. I expect it to have to come back to the 20. It's been a while since it's been to the 20. We need some mean reversion, blah, 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 et cetera, et cetera. Go down to the 1 minute and you can also apply that kind of those thought process. Gary says Bollinger is only good in hindsight, not in the moment. I don't agree with you. It's good at finding extreme fear capitulation. So what I mean by that is, let's say we load a weekly on the Bollinger. If I'm applying the concept of trying to buy markets that are incredibly fearful, once you get outside of a weekly Bollinger, e.g. here, let's just say this. Markets can't tend to hold outside of weekly Bollingers very easily. And when they get outside of weekly Bollingers, they do tend to try to mean revert. Weekly Bollinger is not easy to get out of. So it's it depends on the time frame. I think if you're using it for a scalp technique, again, that's why you can potentially look at a Bollinger and you say, oh, I'm going to, you become a bit too used to using it. You don't need it, but at least it has a 20 in it. So you get your 20 and you get your Bollinger. You get both, 2 indicators in one. Haven't seen any change of trend, guys. So at this stage, unfortunately, what's occurring is you've currently got a nice little, a little sell-off here. And you've now got a peak behind this point. And you got your trough. And you kind of need to breach that for then pull back up. All right. So at this point, we kind of either need a new down and an up, and then you get like a tighter kind of level, which would be nice. But this is around the right zone for it to have a go. In terms of it would want to try to hold up here. Would I buy right now? Not me personally, because I like to wait for the reaction. YouTuber says, I sold it open and just bought a few minutes ago. He's beast mode scalping this thing. He's using the Bollinger. He's like, you know what? Top of the Bollinger, bottom of the Bollinger. Nah, I know he's not, but yeah, could be. QQQ just fighting the 10-minute 50. Yeah, so QQQ, well, all of these markets, really just kind of floating at this stage. We don't have any turnaround signals just yet. Bollinger Bands are better on the daily charts. That's correct. Daily and weekly would be where I like them the most. We'll get rid of it now because it's annoying me. So what I'd be looking for today, guys, until proven otherwise, we're still unfortunately negative. We are in interesting levels. So we're hitting those kind of first zones. You can see why the Nasdaq's trying to hold up. It's hit a level of interest, but we haven't seen a change of trend, and I would rather react than predict here. So that would just be my kind of concept. This is why we've got the box zone. You can see the resistances. You can see the level that could be finding support. It does make sense. I will let you know there's a secondary one just below, well, not just below, but quite low down here. And this is where that volume profile really hits it because there's a lot of orders there. $0.10 Murphy says, go by Bollinger. I'm about to get roiled. Why do you use US 100 and not NAC? I come from Australia, so I mean, we mostly have CFDs like this that I got used to. So using any other code like NDQ, obviously you would use that to recognize the real market. This will show you where the gaps are. So I love NDQ. Another reason why I'm kind of bullish at the moment on the markets is because even if we go to fill the gap that's down here, we still broke that downward trend. So remember, we breached the horizontal. We've breached through that. Any pullback currently still theoretically can get us to the promised gap zone. Mark Garnham says, hi, Tom. What do you expect next month if we close lower on the month for the SPY and Qs? Oh, please don't say that. That'd be brutal. Geez, I tell you, that'd be really negative. And look, I'll just say this. I'm not a person that looks at it and says, I'm not a negative person on the economy, generally. But I will say this. If we make another new low, most bond traders, these are bond traders, say that we're going to wipe everything off from the pandemic and then a little bit. So unfortunately, if that did occur, what they're saying to me is that the market should end up around here. Now, I don't know whether to believe them, but I'll say this about bond traders. These bond guys, they know more than the traditional person. They made a few bill, so their opinions do matter. So that's where they think it's going. Netstar says, I use LED candles, you never get burned. That's big brain right there, Netstar. Heavy selling on IWM. Yeah, down 1.26. So obviously another one that's getting pretty hit. We'll load just NDQ so you guys can see the difference. The problem is the long weekend kind of stuffing with these real percentages. The real percentage of the market being down is only 1%. The percentage of the futures market being down, obviously 2. ATX Myers, we can do that. Let's do some crypto here. We're still floating around that kind of heavy support here for the markets. Let's move over to Bitcoin for a second. 31.3. So unfortunately, well, fortunately and unfortunately, Bitcoin hit my big 32K and it got smoked as soon as it hit it. So this level here is where orders sit. There's I just believe there's orders there. That a lot of people are looking at this. A lot of people are looking at this. They're not understanding there's orders here. Mark, that's where those sneaky cats, they're all sitting around there. So a break of 32 plus would be really, really, really handy. For anyone that got this over the weekend, congrats. You know, if you use this kind of idea of breaching that downward trend, moving up, obviously a huge rally, 32K, that's tick, 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 tick. What I'd like to see here from Bitcoin is probably a stabilization, come back down, test this zone, find buying pressure here, and then move back up through 32K. But I think that can only happen if the stock market stabilizes. Otherwise, not going to be possible. Let's do ATX. And you've got here block on the Q coin. Block on the Q coin. Okay. Never really heard of it. It's probably new, I guess. Well, it's going to be really impossible to do any TA on this other than it's come back down to its IPO, ICO, whatever. Doesn't have a huge amount of history. So let's have a look at the daily. Theoretically, it's not really done anything that's impressive yet from a change standpoint. Let's go to the 1 hour. Yeah. I think the problem with this is that it's not maybe even this coin's fault, or it's not even about this coin. It's about the whole market. And at this stage, unless crypto, so what you really need to happen is you need Bitcoin to stabilize. Bitcoin cracks 32K, stabilizes for like a day or two. Ethereum will run and then your other coins will run with it at the same time. They'll catch up. They'll play catch up. It all comes down to, look, crypto is really just this. What the hell is Bitcoin doing? Once you know what the hell Bitcoin's doing, you kind of can figure out what the rest are going to do. It's a domino effect. It's like the stock market. What is the S&P 500 doing? Once we know what that's doing, everything else makes more sense. Of course, the Nasdaq and the Dow and things do play a part, Russell, but realistically, Bitcoin, what it's doing matters, and it's the first one. If it stabilizes, the rest can come. And that's how I would say it. I don't even know if you could TA this thing effectively. Has it been technical in the past? Is a question I would ask myself. I mean, I'll ask the chat. Is that technical? We've got over 1,000 people here. Does that look like a technical chart to me? I will give my opinion in a second, but I want to know whether you think that's a technical chart or not. Got a question here about seasonality. I'll bring it up for you. I'm just bringing up a question here while we figure out whether everyone agrees with that or not. So I'll use midterms. Okay, so I'm going to bring this on the chart here because we've got a super chat for it. Yeah, this just looks like some kind of hype followed by the story being bad, followed by wherever we are right now. Yeah. Unfortunately, that's the problem. Someone says here that the S&P 500 is recovering and the Nasdaq. We'll check it out in a second. Verified News says, what's seasonality for June? $10. Thank you very much, Verified. Always appreciate that. Let's bring it over here. Yeah, if I was going to say what are good cryptos, I mean, I would just go, to me, Bitcoin's the king. Ethereum is the crazy cousin. It's pretty good. Cardano's okay, maybe. Questionable. It's definitely on that list of the next kind of ones. And then the rest of them, there's a whole bunch of others. I don't know much about them. I'm not going to say I'm a professional on those. I'm actually least professional on those, yeah? But I do understand Bitcoin and Ethereum. I don't even understand Cardano, so chuck that one out. Bitcoin, Ethereum, Bitcoin, Ethereum, Bitcoin, Ethereum. They're only two that I didn't even know of. So here's the seasonality here for the next couple of months. We got asked about this. It's a great question. I've made it so it's just midterm years. So what you'll notice is that technically in the last couple of midterms, what's occurred is we've had a rally coming off the back of May into June, into July, into August, and then a horror show at the end of the year. Now, some people are arguing this is the scenario here where we have that kind of May, June period. And June into July can be very strong in stock markets. Now, obviously, it's just seasonal data. We don't necessarily know it's going to happen. But currently, we have a market that's bulled, funnily enough, at the exact point that you expect it to bull, kind of that mid-May into the back of May. It is bulling at this stage. It's still bulling, even though it's down today for now. And we just haven't seen enough information to give us anything else. So not much of a rally there yet. Still very weak here on the rallies. Horror show rallies at this stage. Still, the trend is down for the day so far. What do you think of wheat, female investor? You know what I think of wheat. I think wheat beat me. It shellacked me. The twister came, the hurricanes, the beetles, what was that beetle? The plagues that ate all of the Egyptian fields or whatever. That's what came and it ate my wheat fields and it destroyed my trade. Yeah, the wheat trade. My God. I'm never trading wheat again, guys. That roll contract. Woo! Jeez. Caught me. But that was a long time ago. And when you learn a lesson, if it's a good lesson to be learned, you go, don't go back to it. Locusts, that's the one. Got those nasty locusts coming out. Locusts got me. It's kind of like when I was so right on coffee and I bought coffee under 100. Was I right? Yes. Did it cost me a hell of a lot to hold it? Yeah, it cost me about 30%. Did I make money? Sure. Was it worth it? Not really. Consumer confidence coming up in 2 minutes, says Good Learner. Yeah. So look, realistically, these markets at this stage are sitting at points where, especially the Nasdaq, is sitting at a point where I expect some form of bulls to try to keep this up right here. Expectation doesn't mean reality. So we need to actually see something tell us that the change of trend is in. And just remember this. It's currently all downtown. So until it's uptown, I'm not interested in it. That's the way I kind of go off. Gary Sony says, Tom, off topic question. Why do Aussies hate Kyrgios? Do they? I don't even know. I don't hate Kyrgios. He's all right. I think it's because he's outspoken. He says random things. Probably. Anyone been watching F1 recently? Anyone into F1? That was ridiculous that week at that Monaco race. Ferrari jokes. Fracely. that was the worst. That was one of the dumbest things I've ever seen. And these are meant to be professionals. Let's pit our best driver behind the other driver, which guarantees he loses position. Smart. Ricardo is probably done this year, I'd say. I say he loses his F1 seat. Nice guy, but yeah. New low. Still no change of trend. Short is still in control. So I guess we'll probably leave the stream here today. I would like to say a massive thank you to the thousands of people that have joined us. I really appreciate the support. Look, I hope you guys got some value out of this. For now, unfortunately, wait, we've got to do Mitchell Miller. My goodness, $50. Wow. But yeah, like unfortunately, we're still in a downtrend. There's on the small time frames. We need that change. So that's what I'd be looking for today. Mitchell Miller. I can't leave without reading this. My goodness, Mitchell Miller. Can we get some claps? That was massive. $50. It's like $1,000 Australian dollars. Hey Tom, your late night energy is what I need to start my day. Can you please do a quick TA? Absolutely, Mitchell. TA on ONCT, long-term holding on this, and have been DCAing for some time. Well, thank you very much there. Appreciate that. Whew, $50. Now I can finally support those Google prices. Andrew Teo says, Ferrari screwed Charles. Yes. ATL says, were there actually any overtakes? In the pit stops, yes. It was a pit stop overtake. No, Gasly overtook a bit. He went on a little run, but yeah, other than that, I would say so. I watched the MotoGP as well. The MotoGP wasn't enticing me. It's like that sport hasn't learned. F1 has. All right, let's do this ONCT. Thank you very much, Mitchell Miller. It's a therapeutics company. Let's start from the top down. Do a quick top down analysis just so you guys can see how I do it. All right, so this stock is relatively getting stuffed at the moment, it looks like. Is this the right one, Mitchell? Do I have the right one for you? Why is it so small in range down here? Hey? ONCT. Okay. Is it? What happened here? That's crazy whatever happened there. Anyway, that's a few years ago. So monthly shows some randomness that happened over that point. Now we're back to $1.30 and we've gone from 10 all the way down. Okay, so let's go to the weekly there. Okay, we don't want to do that. Just a mega downtrend at this stage. How bad is the cash burn on this business? Earnings and then a randomly huge volume day or volume week. Let's go here. What is that? What happened here? Something obviously happened here, some kind of announcement or something. The problem with this stock is it's not really about technicals, clearly. It's not a technical trading stock. It's all about the fundamental shift. If I was looking at this technically, I'd say, hey, look, that horrible downtrend has finally stopped. And whatever this was a huge deal. But you need to understand whether that has long-term ramifications of pickup, because if this is the stock, it's not very technical. Here we had a little bit of a base. We never got through that. Over here, all I could say is that it's hugely down. It's kind of breached that downward trend with whatever that news was. And that is pivotal to understanding whether this is really going to turn or not. And ideally, it starts ramping now. But something fundamentally is very sick here, and I'm not sure what it is. I assume you understand the business. Is it cheap? Yeah, I guess. It's very small. Knock, knock coming out. Very cool. Thank you, Mitchell. I hope that's it. If not, just message me in Discord. I'll look at it for you. Jason says TA on small cap companies is less reliable. Yes. Less algorithms, less trade. Think of it logically. TA works well on high liquidity. So whenever you're trying to trade a small company, it's probably not highly liquid. It's not going to work. TA works on high liquidity. Always remember that. If you're trading something with a market capitalization in America under $1 billion, it will not be as accurate. If you're trading an Apple, a stock market, like an S&P 500, a Google, whatever else, an airplane company that's worth 20 or 30 bill, it probably works. On the rest, it will not work as much. Knock, knock, $5 says Aussie, Aussie, Aussie. Oi, oi, oi. Thank you very much. Knock, knock. Appreciate that, man. Good to have you back in the stream. I hope you're doing well. You're still in those crazy NFTs, man. What are the NFTs? I kind of just interested. What the hell are these NFTs doing? I just want to see here. Let me just check the NFT market. It's only one NFT market I care about. Can anyone guess which one it is? It's only one that I care about. Every other NFT I'm not interested in looking at. I watch one market and one market only. It's my S&P 500 NFT market. How do I actually figure this out? Where am I going here? Here we go. Oh, they're still bloody expensive. All right, here we go. Oh. CryptoPunks? No, I'll go for the Bored Apes. CryptoPunks would also be fair. That's Nasdaq. We'll go with that's the. They're just so ugly though. At least the Bored Apes are slightly less ugly. So what's going on here? We've kind of dropped, but not dropped as much as I would think. So that's a pretty decent hold, really, considering. So they've been basically still trading where they were. I'm surprised this is holding up so much. I guess it's because it's based in the amount of Ethereum, and Ethereum still has dropped. So it's all, relative to the ratio. So still pretty expensive. Yeah. April 30th. My goodness, they got up that much. So yeah, it's dropped. They've dropped a lot because of the value behind them. But geez, still floor price 87 Ethereum. Puh. Can't say I understand it. I'll tell you what, you give me the opportunity, the Bored Ape for 400,000 or 200,000 American dollars. It's a beautiful Google Microsoft stock. I'll take my Microsoft Google stock. Yes, okay, I might not make as much money, but I'll still take it. I'll still take it. I'll still take it. NFT's a scam. Yeah, well, that could be true. So at the moment, ES1 holding up, so S&P 500. Nasdaq still continuing to get floored here early. So until you see the change, and remember, we suddenly have a new low, so we can now shift that to here for where we want the change to occur. The one good thing about every time it makes a new low is the shift goes behind the last peak. So we just keep shifting it down and we don't know where it's going. So it's through the box now, unfortunately. ES1 holding a little bit better. So S&P 500 futures doing a little bit better. Gareth Evans says there's been some seriously shady dealings in OpenSea. Yeah, look, NFTs are very new, very speculative, and very, very dangerous for people that aren't in the know. The people that truly make money in both the Bitcoin market and the NFT market are the inner circle. What app were you using to see the pre-market prices? So we're using Tiger Broker. We'll check that out a little bit later. Don't worry, it'll be coming back because there is a reason why I've got it open. But yeah, I'll be doing a little bit of work with that over the next coming months. Wait till next week. Wait till next week. So guys, thank you so much for joining us. We'll finish it up there. Look for the change. At this stage, still negative short-term time frames. Remember, until you see the switch, what's the point of fighting the system? There's not much point in fighting these guys. You can't fight them. Don't fight them. That's bad. If you're with the trend, well, sure, you celebrate until the trend ends. So, yeah, we will be doing a stream next Monday. It's going to be a pretty cool one. I definitely would suggest you come along to it. And as always, if you want to get access to the private community streams where I do small snippet kind of streams ahead of the market each day, you can do so by clicking the link down the description below, free 7-day trial. I think it's well worth it. We've added a whole bunch of extra stuff in there. You get access to the Discord community, our crazy options robot that's in there, and everything else. If you don't, that's fine. Join the public Discord. There's a whole bunch of people probably celebrating the short right now. In fact, I'll bring it up. Let's find out. I'm sure they're having a go at it. Let's find out what they're saying. Yeah, they're all looking for structure changes at the moment. I'll bring it on so you guys can see. So they're all having a good chat. We've got about almost 9,000 people in there. So definitely come and join. It's awesome. And if you want to come into the private, you can, to get a little bit more of this type of action, but obviously in-depth, quick snippets, key levels, that kind of stuff. Otherwise, I wish you all the best this week. Stay safe. Remember, when the VIX is above 25, pull everything in. Don't be looking at 5,000 stocks anymore. It just confuses you. And the one thing I always say about our minds is we have Cocoa Puff minds. That is, we can't take too many inputs. If you throw a lot of information at yourself, you get confused and then you have a migraine. You don't want that. So during times like this, which are very, very, very quick, you've got to be fast and nimble. What you're looking for is you're trying to get clarity. To get clarity, only have a certain amount of inputs. Don't be that person that has an indicator down here, an indicator down here, another one, and another one. We all know the friend that does this, and maybe even another one. And then this is your price action. Well, how are you going to do that? It makes no sense. So try to simplify your lives. Even if you just go naked charts like this is, it's the best way. Naked charts is awesome because once you understand indicators, you can tell what a stochastic's doing right now. You can tell what an RSI is doing right now. You'll know every time because they always do the same thing because they're lagging it. So yeah, there are some leads, mostly lags. Learn the price action, learn the naked charts. Good luck out there. When VIX is above 25, bring it in and focus on the key markets. Knock, knock, thank you very much for becoming a member. Again, Mitchell, thank you very much for the $50 super chat. Appreciate all of you. Thank you for the likes. We're almost at 100,000. And I haven't okayed this with anyone, but I think we'll give away maybe a little bit of a bonus to some lucky winners when we hit the 100, because that's been a dream of mine for a long time. We're going to do it now. So I hope. And yeah, I really, really appreciate that. So yeah, we'll announce that soon. I'll see what I can get together. But I really appreciate it, guys. Thank you so much. We'll see you in the next stream later on next week, or the video for tomorrow. Let's hope there's a turnaround in here somewhere, because at the moment it's just been down, down, down. I want up, up, up. That'll be good. Brian W says, love me some naked charts. My puts are printing. Very good. Give us your Tesla. Nah. You're not getting that one. You can't have my Tesla, all right? I'm still enjoying the Tesla. The best thing about the Tesla, guys, probably the minimalism. That's what I'd say. The build quality is not the best thing about Tesla, but the minimalism is pretty good. So yeah, and speed is obviously nice as well. All right, catch everyone. See you next week. Thanks for now.